Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top headlines that we're tracking for you this morning. There's a lot for us to talk about after that big inflation number from the United States. We did see a good handover come through from Wall Street, and on the back of that, you have all of the Asian markets which are trading with good gains. Gains this morning are led by the Japanese Nikkei markets, which are over 3% in the green right now. You have Hang Seng and Taiwan on your screen, and both of those also seeing good gains of around 2.5% each. So that is the kind of up move that we're seeing across the Asian markets. The Korean markets are also opening quite well, so they've currently around 2.5% in the green as well. Shanghai's trades a little bit, the kind of up move that we've seen isn't as significant as this, but they're both around 1% in the green as well. So all in all, for Asia, it's looking like a good start, and the SGX Nifty will also come up for you. It is indicating a good gap up start for the Indian market. 288 points higher is what we have for us on the SGX Nifty. So that's what's happening in Asia, but let's also talk about the US markets now. Wall Street staged a sharp reversal overnight after a sell-off in early trade, led by, of course, the red-hot inflation print for September. So the Dow Jones ended 2.8% higher. The S&P 500 closed around 2% in the green. It was 2.5% higher, actually, at the close, and the Nasdaq also saw a 2.2% up move. Now, stocks staged a massive turnaround, ending a 6-day losing streak after the September retail inflation came in higher than expectations at 8.2%. This also reinforces expectations that the Federal Reserve will continue with the large interest rate hikes that we have been seeing in the coming months as well. So here's CNBC's Rick Santelli with an analysis of the CPI print that came through.
Number up 0.4 on headline, double the expectations, and that is the highest since, well, June, when it was at its peak at 1.3. That was the highest since 2005. If you strip out the all-important food and energy, also 0.2 hotter, up 0.6. That's the hottest since June, when it was up 0.7. High water mark all the way back in April of 21 at up 0.9. Year-over-year numbers, 8.2, hotter than expected, but cooler than the rear view mirror. 8.2. Until we get a revision, it follows 8.3. The high water mark here was 9.1. That was in June, going back 4 decades. And finally, year over year, strip out food and energy, also hotter than expectations, up 6.6. That follows 6.3, and 6.6 is a new high. The old high was 6.5 in March. That went back to 1982, but in 1982 we went all the way up to 9.3. So even though it's a new high water mark, it doesn't change the comp back 4 decades to 1982. If you look at yields, they are just skyrocketing. We're almost back up to 4% in tens. Now let's go to initial jobless claims. 228,000. That is up 9,000 until we get a revision to the 219,000. And on continuing claims, 1,368,000, darn close to expectations. Very close also the rear view mirror, 1,361,000. But we can really see the yields have shot up here to 4%. And if you look at what's going on with regard to 2-year note yields, they're all the way back up to 4.32.
All right, Rick, thanks a lot for getting us all of the highlights and analysis of the CPI print in the United States. But let's also bring in some important opinion on the Fed's fight against inflation, as well as the global economic uncertainty that we're seeing. This is from IMF's first Deputy Managing Director, Geeta Gopinath.
Are incredibly fragile times, highly volatile times, and you're certainly seeing this in the markets on a minute-to-minute and an hourly basis. So we'll see what the numbers look like. I think it's fairly clear that inflation is going to be high for a while in terms of relative to the Fed's target. So in some sense, this one number, I don't think is going to make that much of a difference to what the Fed has signaled at this point. These are real risks. There's so much uncertainty. The global environment is changing so rapidly that, that I think should be expected. But that said, just if we go with the path that the Fed has signaled, we're comfortable with that. We think that that path is what is needed to bring down inflation durably.
All right, that is the word coming in from Geeta Gopinath on where things stand as far as the economic uncertainties goes and the big inflation concern. But with that, let's move on to our final update from our global market wrap this morning. So European markets ended Thursday's trading session higher. The rates are up on your screen. The French CAC index was 1% in the green. The German DAX surged 1.5% at the close, and the British FTSE index closed with gains of around 24 points. Now, the German consumer price index figure came in and it rose 10% on a year-over-year basis in September, and it's 1.9% higher on a month-on-month basis. If we talk about the currency move, the British pound also jumped against the US dollar following reports that the UK government was in talks to scrap parts of the tax cuts package. Now, remember, lastly, today is the last day of the Bank of England's emergency bond buying operation. They had announced an end on Friday, so that is going to, so today is going to be the last day of that as well, and that is an important cue for us to track. So that's what's really going on globally, but let's talk about all of the cues that you should also track as far as our own markets go. We have our research team joining in with the trade setup this morning. Nigel, Vivek and Vahishta all join me now to take you through the trade setup and all of the stocks that could be in the news today. Guys, a very good morning to all of you. And Vivek, let me come across to you first. After a while, I can finally say that the handover has been positive.
That's right. So 6 straight sessions of losses, and finally one day, we are actually seeing some green as far as the screen is concerned. Yesterday was an extremely volatile session, like we highlighted. Over a 1,500-point recovery from the day's low as far as the Dow Jones was concerned. And this has actually led to a lot of buying across the screen, even in the Asia and over today morning. But having a look at, how Europe also performed, Europe also, after a very volatile session, actually managed to recover quite sharply. And most of the European indices ended in the green as well. Now, coming to crude, and, again, this is something that's a little bit of a concern at this point of time. Brent prices, too, went up almost 2.5%. And NYMEX also went up almost 2.2%. to around $90 a barrel. Now, when you're talking about the data points today, remember China too just released their print data as well, the CPI data. The September CPI for China too came in around higher by 2.8%, and this was against an estimate of 2.9%. So some softening or slightly below what the market was anticipated. This has also led to increased buying activity. Coming closer to Indian markets, the SGX Nifty is indicating a good gap-up start as far as markets are concerned. Remember, Indian markets would be reacting to the strong earnings print of Infosys, Mindtree, and other companies as well. So it'll be interesting because it's an important day both for Indian as well as US markets. US markets too have very major banks reporting their earnings today. So it's going to be an interesting session.
All right, Vivek, thanks a lot for taking us through all of those cues. But let's also talk about the individual stocks that we should be tracking in trade today. Vahishta has that entire list. Vahishta, of course, Infosys will be the big one, and the ADR itself was up around 5%.
Yes, that's right, Pavitra. The first is Infosys. The constant currency revenue growth is coming at 4%, while the margins have jumped 150 basis points in Q2 of FY23. The company has said that FY23 revenue guidance has been revised 14-16% to 15-16%. So the guidance has just been tightened up. Now, moving on to Cyient, where the revenues and margins have come out as a miss. The dollar revenue was up 8.2% quarter-on-quarter, and the rupee revenue was up 11.7% on a quarter-on-quarter basis. For Mindtree, though, it had a strong show with the dollar revenue up 5.7% on a quarter-on-quarter basis, and the EBITDA margins have come in at 21.05%. Angel One had their quarterly update, wherein the company has the highest ever quarterly revenue of 717 crores. Anand Rathi Wealth, the AUM was up 16% and is now at 35,800 crores. And the last stock is HDFC Life, wherein the company has received the final nod from the insurance regulator for the merger with Exide Life Insurance.
Okay, Vahishta, thanks a lot for taking us through all of those individual stocks that we should be tracking in today's session. We'll keep all of these on our radar. Finally, let me hand it over to Nigel, who's looking at all of the cues from the futures and options space. Hi, Nigel.
Well, morning, Pavitra. You said it right. After a while, we're seeing a green start to trade. So let's see whether or not we can end on the green note. Now, yesterday we had expiry. That's weekly expiry that did play out. And the bulls were giving a sense that they're fighting back. But because it was expiry and because the institutions were net sellers yesterday to the tune of close to 900 crores odd, we ended in the red, though we defended the 17,000 mark on a closing basis. I was looking at the live indicators that we have, and on the Nifty itself, there was some short addition because the Nifty ended low and there was some bit of open interest build up. However, on the Nifty Bank, people were a little bit disappointed. Why didn't that participate yesterday? It appears there was more unwinding of long positions, so there was no shorting that we saw on the Nifty Bank itself. What did the FIs do? Well, they added shorts yet again, and now I think, they're overdoing it. Close to around 6,000 contracts is what they added yesterday. The short positioning continues at around 81% odd. Now, the hope is that if we get some bit of positive news, like the global handover is positive, maybe, just maybe, the shorts could get squeezed out. Remember, when it goes to around 86, 87%, that's generally when we do see a bit of a short covering bounce. The crucial options as well come up for you on the screen. The 17,000 put, that has the highest amount of open interest for this weekly expiry as well as the next one. So that is the line in the sand out there. That's giving you a sense of 16,800 to 16,900 odd mark could get protected. 17,100 put as well, fairly active in trade. The call writing, though, was seen at around the 17,000 call. Now, that's very important because yesterday the premium started around 250. It ended closer to around 200 rupees approximately. And the resistance level will come in at around the 17,250. The SGX is indicating a start over them. If we can hold above that level, I'll tell you what, we'll be in for a massive short covering bounce. The other stock to look at towards the end of trade will be HDFC Bank because numbers tomorrow. Back to you, Pavitra.
All right, Nigel, thanks a lot for taking us through, all of those cues that we're tracking from the futures and options space. So let's see where we start. It definitely looks like a positive start. We'll see if we can sustain and hold on to those opening gains. With that, we're going to get into a short break now. But when we come back, Infosys reported its second quarter earnings post-market hours like we told you. So we'll get you up to speed with all of the highlights.
17 को सारे ट्रक्स लोड हो जाएंगे, 18 को पहुंच जाएंगे. डोंट वरी, सेम रेट्स.
आपने कैसे एग्री कर लिया? उस रूट पर आज तक कभी प्रॉफिट नहीं मिला है.
शर्मा जी,
अब बीता हुआ कल देख रहा है और मैं आने वाले कल की कहानी लिख रहा हूं.
टाटा ट्रक्स लाए हैं माइलेज बढ़ाने वाले एडवांस्ड फीचर्स. अब प्रॉफिट होगा और भी ज्यादा. टाटा ट्रक्स, देश के ट्रक्स.
The interesting thing that we are seeing on Twitter is that there's a complete explosion of conversations that happen in the week of Diwali, and they pretty much cross more than 3 million conversations.
It's very, very important to have a healthy and a positive conversation around your brand throughout the year so that you are in the consideration set.
We did not take it to television because my audience was sitting on certain social platforms. So we were able to be very targeted. So the right content, reaching out through the right platform.
Hi.
Surprise!
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 अगर आपका म्यूचुअल फंड भी अनप्लान्ड सिचुएशंस के लिए तैयार रहे तो बैलेंस एडवांटेज फंड है मार्केट के उतार चढ़ाव के लिए हमेशा तैयार. म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है. योजना संबंधी सभी दस्तावेजों को सावधानी से पढ़ें. एक्सिस म्यूचुअल फंड.
A forum to discuss and deliberate ways to fight against the smuggling and counterfeiting trade. Watch Vicky Cascade presents 8th edition of Masquerade 2022 at this time on CNBC-TV18.
Presented by Vicky Cascade.
काश कोल्ड कॉफी होती.
बेबी, कोल्ड कॉफी.
50 सालों से आपके लिए कुछ नया सोचते आ रहे हैं. मिल्टन.
Positive thinking combined with diabetes management will always help you to live well with diabetes.
Eat well, to live well, to exercise, and please sleep on time.
A cricket match cannot be won without a good batting, bowling and fielding. Similarly, diabetes cannot be conquered without a right combination of diet, exercise and medication.
Watch Live Well with Diabetes at these times only on CNBC-TV18.
Welcome back. You're still tuned into Power Breakfast, and the big earnings that came through yesterday were from Infosys. Now, they posted a mixed set of second quarter results. So Rima is here to bring us up to speed with all of the highlights of that as well as their buyback plan, which they did announce yesterday. Rima.
Thanks so much for that. So Q2 is a mixed performance. Revenues missed street expectations. It's a 4% constant currency revenue growth, but margin expansion has come in as a big surprise. Margins have gone up by 150 basis points to 21.5%. The FY23 guidance has been tightened. So on the top line, earlier, the company was expecting a 14 to 16% growth. Now they're expecting 15 to 16%, which means at the lower end, the company has raised the guidance by 100 basis points. This is a positive. Margin guidance in a way has been brought lower. Now they're saying that margins will be in a band of 21 to 22%. This doesn't come as a surprise because anyway the margin guidance earlier was that we will be at the lower end of our guidance, which means closer to 21%. The big positive in the numbers is the deal wins. Deal wins have gone up to $2.7 billion. This compares with the 4-quarter average of $2.1 billion. So there is a sharp pickup that we've seen in deals. Attrition has moderated for the 3rd quarter in a row. In the management commentary, the management has spoken about concerns surrounding high-tech and telecom. These are two new areas that Infosys management has called out where they are seeing growth moderating. That said, the relevance of their proposition in terms of bringing transformation or cost efficiency stay, which is why they're seeing a very strong large deal pipeline. They've also announced a buyback, a 9,300 crore open market buyback at a maximum price of $18.50. All in all, it's a good showing from Infosys and the street should like it.
All right, Reema, thanks a lot for taking us through all of the highlights. The street should like it. The ADR is already up 5%, like we told you, 5.5% now. And in fact, sticking with Infosys, my colleague Ritu Singh also spoke to the MD and CEO, Mr. Salil Parekh, and began by asking why the guidance for revenue was tightened for the forthcoming quarter. So let's listen into that conversation.
On the growth guidance, we've seen as we go through the quarters, normally we reduce the band of the guidance as we see more visibility within the full financial year. We've seen very good large deals momentum. We've seen good pipeline and a good Q1 and Q2 on growth. And there we've made the guidance in the top end. So we had 14 to 16. And now we made 15 to 16, which is at the higher end of the guidance, which gives us more confidence and visibility of what is going on within the year. Margin guidance, last quarter we had said that our guidance was 21 to 23%, but that we would be closer to the lower end of the guidance. As we've come in here for this year specifically, since we felt we were going to be at the lower end of that, closer to the 21% in the guidance, we've decided to reduce the band so that it's clear what we are saying on the guidance. In most years, we don't change the margin guidance. We keep it the same because our aspiration, and even for next year and the future, will always be to higher margins.
You know, the macroeconomic environment, and you've been outlining this as well, has remained challenging, especially in Europe. Could you tell us what the conversation with clients have been like? You said high-tech and telecom are some of the sectors which are seeing stress. Is that only in the European market or in the American markets as well?
So there, the environment is got many different aspects. So first, if you look at what Infosys is doing with supporting our clients, we are seeing growth in both digital, over 30%, and growth in our core services. So we have now really two engines, both of which are growing for different reasons. We see that our digital capabilities and Cobalt are extremely resonating with our clients, and our automation is also working because there are cost impact that we're having. Now that if you superimpose on the macro, what we said last quarter was the mortgages in financial services, parts of retail industry. Now we are seeing parts of high tech and parts of telecom, where some of the discretionary spend are coming down. However, we are also seeing our large deals value for Q2 at 2.7 billion.
But is that sustainable, the 2.7 billion kind of a run rate?
So there we are seeing a pipeline for large deals extremely large. Now why is that? Because the earlier point, which is both digital and cost, are both in our playbook. And depending on how the macro develops, we will see which ones will be more important for clients.
All right, that is the word coming in from the Infosys management. With that, we have to get into a short break now. But when we come back, we'll shift focus and talk about the commodities market. We'll tell you what's going on with the crude oil prices. So stay tuned for that.
Suzlon Energy Limited, one of India's top manufacturers in the wind component manufacturing segment and one of the top renewable energy O&M service providers in India. With a footprint across 17 countries on 6 continents, the Suzlon Energy Limited rights issue of 2,400,000,000 partly paid up equity shares of face value of ₹2 each for cash at a price of ₹5 per share. Opens on 11th October, closes on 20th October. For more details, refer to the letter of offer.
The interesting thing that we are seeing on Twitter is that there's a complete explosion of conversations that happen in the week of Diwali, and they pretty much cross more than 3 million conversations.
It's very, very important to have a healthy and a positive conversation around your brand throughout the year so that you are in the consideration set.
We did not take it to television because my audience was sitting on certain social platforms. So we were able to be very targeted. So the right content, reaching out through the right platform.
Let me introduce me.
Just be you. Lenovo Yoga.
No more thing! No need to check. No need to see that.
Before buying a new car, check Acco Insurance Company and save up to $45,000.
Hey, heat my Milton.
पचास सालों से आपके लिए कुछ नया सोचते आ रहे हैं मिल्टन।
Welcome back. You're still watching Power Breakfast, and let's talk about the commodities space now. Manisha Gupta joins us with an update. Manisha, good morning. It's all about crude once again.
It is, and even as we did see 2% of gains overnight, but this week clearly is headed on a weaker note with 3.5% of a decline there. What the markets are reacting to in sense of strength is that the U.S. distillate inventories have declined 4.9 million barrels ahead of winters. So this is the winter stocking, whether it's Europe, Asia or U.S. That is what seems to be supporting the crude oil prices. Apart from that, when you look at the U.S. crude inventories, and even as we've seen a jump in that, it still is 1% below its 5-year average. Then the markets also are looking at a leak in Druzhba pipeline, which goes from Russia to Germany. More and more concerns about supplies to Europe is something that is adding premium to prices as well. The markets also are looking at the IEA, OPEC, and U.S. Energy Department, all suggesting that this year and the next year, the global demand growth would not be as strong as we've seen in the last couple of years. That is something that is keeping in prices in check, though.
All right, Manisha, thanks a lot for getting us all of that action from the oil market. So let's take a quick look at what's happening across Asia, because all of those markets have only moved higher in the past few minutes. So the Japanese markets as well as Hong Kong, both seeing gains of over 3% right now. You also have the Taiwanese index on your screen. It's up 2.8%. And across Asia, it's looking quite strong. Even the Shanghai markets and Straits, which were slightly more subdued, have moved up in the past few minutes. And the SGX Nifty is indicating a big 320-point gap up right now. So that's what we have for our own markets. Thanks a lot for tuning into Power Breakfast. We have Bazaar Morning Call, which comes up next.
दादा आप फ्लाइट कहाँ बुक कर